Good morning, Paul Georgie from Allendale. It's February 10th, Friday morning, and it looks like we've got some risk-off type attitude around the commodity circles here this morning. Most of it's prompted by a deal that was soon to be done yesterday with the Greek debt situation. Now the EU ministers said, wait a minute, we need more details. We want a breakdown of all the debt that you say you're going to, the spending that you say you're going to cut, and they also want a vote from the Greece Parliament that they're all in agreement with this debt resolution. So the deadline has been pushed back another week till February 15th when the EU ministers meet again. That's kind of taken precedence here this morning where we've got pressure in the currency, strength in the dollar being up sharply, and that's weighing on the grain markets. After yesterday's USDA report, which was neutral but wasn't bullish enough for the bulls, so the bulls took some profits, got out of positions late in the day, causing the grain markets to close on or near the lows of the day. That kind of follow through is taking place here this morning as well. We're seeing further follow through in the grain markets, mostly based on profit taking and just getting out of positions that didn't follow through after the report. Other news, on the friendly side, I think we've got to still watch Brazilian weather a bit. Southern Brazil is dry here. They've taken some of the rain out of the forecast and put some of the heat back in that gets them up to the upper 90s, the 100-degree range here for a few days. Could cause some problems there, or some more deteriorating in crops. And I think yesterday's numbers from the USDA lowered production of soybeans in Brazil, lowered production of soybeans and corn in Argentina. Trade and in general thinks, well, maybe that isn't enough. However, with the rains that moved in over the last couple of weeks, we suspect that the USDA probably is going to have a tough time cutting off more production out of South America. Other news, we've got Bernanke doing a Q&A today in Atlanta, so that will get some attention from investors and see what the monetary policy might be changing is the big guess there. But overall, I think it's more technical in nature here after we've seen the fundamentals. We've also got the USDA's annual Outlook Conference coming up on the 23rd and 24th of February in Washington, D.C. That's going to be monitored very closely as we approach that. What is the USDA going to do with planted acres in their outlook? And that will certainly have an impact on the markets here and possibly on the spreads between old crop and new crop corn especially. In the livestock trade, the packer margins continue to be in the red. The closeouts at the feedlots are in the red, and we're struggling to move product at the retail counters, and that in turn is got the livestock industry in a quandary at this point, with futures continuing to strengthen. We're not but $1 or so away from contract highs in the nearby contracts in the cattle trade, and this strength that we've seen in the futures could help support the feedlots here today as we wait for some trade from the in the country, and hopefully at steady to higher money than last week, even though margins are in the red. So the tight supplies is certainly giving feedlots the support here, but we look for at some time here in maybe in the next 3 to 4 weeks that we could see some adjustments here as these margins need to be adjusted to at least give the packers the feedlots an incentive to continue on producing livestock. The hog industry is in the black right now. Cutout values there, little change yesterday. I think the pork and the poultry industry are certainly getting some benefit from the high beef prices at the retail counter, and as long as the beef stays strong, we expect pork to continue to be in good demand. Looking at the dollar, that could have some reason for some weakness in futures today, as export business in meat, both beef and pork, is critical to maintaining these strong prices. Stronger dollar suggests not as much demand from foreign countries for U.S. meat. Could be in the traders' heads here today and cause some profit taking after the run-up that we've seen here this week. So a lot of volatility possible today, and we expect to see some choppy markets here. We expect that you'd stay in touch with Allendale's research, because we can continue to provide information that can help you maneuver through these times. Also want to remind everybody that we've got 2 meetings scheduled here for the next couple weeks. In February 24th, Allendale will be in Carrington, North Dakota. If you're in that area, we would like for you to stop in. It's a free meeting, and we'll share some ideas with you on Friday afternoon. And then we've got another meeting scheduled for March 6th in Riverside, Iowa, and that's a morning meeting. I believe starts at around 9:30. All the details are available on our website. Click on the Allendale 2012 Road Series, and we'll give you all the details for those meetings. So we wish everybody a very successful trading day today, safe weekend, and I'll talk to you on Monday morning. Thank you.